Another trading week is preparing to kick off at the New York Stock Exchange, and investors are looking to see if last week's decline will carry over or if we will see some sort of a bounce back. Last week we saw Seesaw trade at its finest. Strong sessions due to earnings and strong slides courtesy of data, that of which included weakness in the tech sector and an improved payrolls report reinforcing expectations for a series of interest rate hikes in the coming months. Adding to concerns, on Friday, a Reuters report surfaced that Elon Musk sent an email to executives ordering them to pause all global hiring and that employee headcount needs to be reduced by 10%. He also reportedly said he had a super bad feeling about the economy. This after JP Morgan Chase CEO Jamie Dimon earlier in the week warned of an economic hurricane coming due to inflation, the war in Ukraine, and tighter monetary policy. And that's all in the past. We do have a full week ahead. Let's now take a look at what will likely move the markets in the week ahead. On Monday, we kick off a bit on the quiet side. In the U.S., 3-month and 6-month bill auctions are due out, so on Tuesday, that's when we see some action. First, in Australia, the RBA rate decision awaits. Expectations call for a rate hike to 0.6% from 0.35%. Meanwhile, in Germany, factory orders for April are due out. Expectations call for a read of 0.5% month over month. Wednesday sees us stay in Europe, but in Switzerland, with the Swiss unemployment rate for May due out. Expectations call for a rate of 2.2%, while first quarter GDP awaits out of the U.S. Expectations call for a rate of 0.3% quarter over quarter, 5.1% year over year. Thursday sees us in China with the country's May imports, exports, and trade balance figures all due out. China's May trade balance expected at $71.3 billion. Meanwhile, in the European Union, the ECB interest rate decision awaits. Currently, that sits at 0%. And then on Friday, we go back to China with the Chinese Consumer Price Index due for May. Expectations call for a rate of 2.5% year over year. And then in the United States, consumer prices are due out. Expectations call for a rate of 8.2% year over year. And we end on U.S. preliminary June Michigan consumer sentiment, that of which is expected 56.9. And keep in mind, earnings season still in effect. Geopolitical updates will also likely move the markets as well, as they have been the last few weeks. And until next week, I'm James Sweeney reporting for ICM.